So essentially all the companies, so this is one of the great websites even I use, the ticker tape, and it helps you to understand like the prices of every stock and the analysis, what to do, what not to do, what is the mood of the market, etc. It's a fantastic website that I use. And if you use Zerodha as your investment platform, so it is linked with this particular website, ticker tape. So for when you do fundamental analysis, then you go and reach here for any given stock. Okay, so you can see every stock has its name, like Hindustan Zinc or JSW Energy, Bharat Petroleum, etc. So every company that you see out there which is listed in the stock market, like Maruti, Reliance, SBI Bank, TCS, Nifty. So Nifty is the combination of multiple stocks, Bajaj Finance, etc., etc. So all of these companies are giving out some shares for everybody to buy and gain an ownership in the company. So if they make profit, you make profit because the stock prices will go up, and stock prices will go up and down and left and right. Okay, and we try to predict it, try to understand, okay, today the stock prices, let's say in this one, what is the 1 year trend, how it has been getting traded in last 1 month, in last 1 year, what has been the trend in last 5 years, etc. And then you decide, oh, the stock has just shot up. So maybe it's not the right time to buy this stock because it's already highly evaluated. Okay, this point would have been the correct point to buy this stock. Okay, now everybody who has invested in the stock market, if at this moment somebody can predict this stock is going to go up, I mean, like it's almost double, right? Almost. So this is a huge gain. In terms of your stock portfolio that you can gain if you had invested it here or here. But stock market is a long term uh, game. Typically all the legendary investors will tell you, and you can see it operates in waves. Sometimes it goes up, then comes down, goes up, comes down, up, down. So these waves continue. There are some major waves of going up, and then there are some major waves of going down. Okay, like maybe the COVID period over here, in 2020, then all the stock market crashed, because there was uncertainty and people were losing faith, etc., etc. This was an awesome time to buy. I mean, I invested a lot of money at this peak, over here or here maybe, and then I reaped the benefits when the stock market went high over here. So just telling you a little bit of story, like if you do this right, if you understand systematic investing, then you can make a lot of money. And it's important, like beyond what you're learning right now, I'll give you an advice to start at least investing using SIPs in mutual funds. Maybe use small cap funds that are there for long duration, and you will make a lot of profit just by doing SIPs. So if you're not doing it already, make sure that you do it, because it's one way, it's the only way in fact to get rich. If you are just earning and then spending all of it, not saving or not investing, then you will continue working till the end of your life. So make sure that you learn about it if you've already not learned. Okay, take this as as one of the learnings from here. So what we are going to do in this session is to try to see, can I extract maybe that, let's say Hindustan Zinc. Okay, can I extract the patterns of Hindustan Zinc stock price, like it is 320, 322, or it is 246. So when it is coming down, when it is going up, if I if I can create a predictive model that can tell me, okay, from here it is going to shoot up or it is going to go up now, and at this moment you can do this prediction. And maybe if the model is not telling you exactly 525, maybe it is telling you 400, or maybe it's telling you 300 something, it's still a valid indicator that you should now invest to get your money up. Okay, now we'll also understand that the predictive models that we are going to make, they are not going to be foolproof. Like nobody could have predicted this market crash of COVID, because it's happening for the first time, right? And largely, if you have understood the stock market, you'll realize that we deal in the secondary market. Okay, the primary market is where the large institutional investors, they move big pile of stocks, and there are, believe it or not, there are a lot of internal insider trading that's known to us, and people manipulate these stock prices and whatnot. So there are many macro things behind stock market. So just using a predictive model, you may not be able to accurately predict all the time, but most of the time you will be able to see the trend. You will be able to see some short-term predictions correctly. So if you use it right, it will be a very good tool to use and analyze and do the predictions for your investments as well. Okay. So people who are already invested in stock market, you will pay more attention to this session. All right. So over here, what we try to do is we first try to install the NSELib library. This library helps us to get the stock prices for any given uh, company. We can use its symbol. So using tickertape.com, you can get the symbol. So this is Hind Zinc is the symbol, ticker symbol for Hindustan Zinc. For Bajaj Finance, this is the symbol. For Bharti Airtel, this is the symbol. HDFC Bank, this. So every company will have its symbol. Okay. And then using that symbol name, you should be able to download the data given a start date and an end date. Okay. You can change these dates and you can extract the latest data for any given stock present in the National Stock Exchange or NSE. So please everyone quickly install this library and let me know if you're able to pull the data for SBI. Let's change the dates. Change the dates from, let's say, 2022 to 2024. We are in May. So you will be able to extract the data only till last trading session. So last trading session happened on what? Today is 11th, so 10th, Friday. Sorry. So if you see, starting, maybe use tail. You should be able to see till, yeah, 10th May 2024. So what we are doing here is essentially using the capital market price, volume, and deliverable position data function. I don't know why this function name was required. He could have, person who created this uh, NSE lib library, they could have easily named it like get stock data. That would be an easy name to remember. But anyway, so you can specify the stock, you can specify from which date and to which date you need to extract the data. Okay. So how many data points do we have? 597, and there are 16 columns. So there are multiple fields that are available in this data. Uh, Equity series, and what is the date, previous close, open price, highest point, lowest price, etc., etc. Okay. So from all of these data points, we utilize the close price of the day. Like, this is the most important information any trader would like to get, that tomorrow or day after tomorrow or 10 days from now, what will be the closing price of a given stock. Okay, so this is the column that we'll be using in our analysis. So we are using this close price column and we are plotting it, and we are using the date in the x-axis and the close price in the y-axis to generate this chart. So if you take a look, it looks like this. it's it's growing. The trend is like the stock market, the SBI stock is doing very well, and it has jumped up uh, since December 2023 in early January. All right. Now, as I mentioned, like what we try to see over here in the stock market, let me just find you this SBI pin. So as you can see, there are multiple ups and downs. At this point, it is going down. This point, it is going up. So it operates in cycles. Okay, and eventually there will be a trend, like it is continuously going up or continuously it's going down. The company is doing well or the company is not doing well. Okay, so this company, it seems SBI, number one bank in India, is doing well. Okay, its stock price is going up, and if you had invested it somewhere over here, then you will be getting almost double or 2.5 times returns in just 2 years. Okay, so the key thing to understand here is you can do a long-term time series prediction, okay, the cycles, or you can do a short-term prediction by learning that, okay, we have a high price here. Why? Because there were high, 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 low, 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 high, high. So if this is the pattern, I can then predict, okay, here the stock is going to go up based on all the historical data patterns that I have seen. So one cycle, two cycle, three cycle. I've seen multiple times that if this is the sequence like 406, 432, 454, 451, 58, 90, well, maybe the next value will be 530. So these are the real data examples with which the stock market has varied. So I can create multiple such combinations of data. I can create multiple such examples and then train my algorithm to learn these patterns. So if I come back here, what I try to do is uh, um, I try to create this kind of a data set. Okay, maybe hold on, let me just run it without standardization. Help you realize. Yeah. So if you see, what I'm trying to create here is a set of data points where it says, okay, these were the last 10 prices, and based on this, I'm predicting the 11th price. Then I'll start from here and reach till 514. Okay, these are the now next 10 prices. So based on these next 10 prices, I'm predicting the 11th price. It should be 506. Then I'll take these prices and then I'll try to predict the next price, which is 515. So how am I doing that? So in my data, I have these. So first 10 values, then predict the 11th. Second 10 values, predict the 12th, so on and so forth. Okay. Why 10 values? Can I use 20? Can I use 15? Yes, you can use any number that is configurable based on last n prices. I want to predict the n plus 1th price. All right. So once we train the model in enough examples of this scenario, like, okay, last 10 prices 11th, last 10 prices 11th. When we train the model, the LSTM model, with enough such examples, then we will be able to make the future predictions, and then we'll be able to extrapolate that, okay, the next few set of pricings will look like this, or the next few days of pricings will look like that. Okay, and in the end, like, we'll be making these multi-step predictions. So we'll be predicting uh, for the next 10 days or next 5 days manually as well, that we will be able to tell, okay, this particular stock will be at this much for the next 5 days. All right.